So good morning, everybody. This is Dennis Wilburn with the Active Trend Traders. I want to welcome you to today's How to Make Money Trading Stocks webinar and show. We'll be doing a real quick analysis of the market for you to get you prepped up for next week. And I want to welcome everybody, as I was stating before we went live, that we've got well representation. We've got some people over in Singapore. We've got some people all the way in Spain, Ireland, and across the United States. So welcome. Glad you're here today. So I want to remind everybody that all the materials that we do present are for training purposes only, and traders should always paper trade any new method prior to the risk of their own personal capital. Paper trading, I am a big proponent of paper trading, because I think that is, and it's like practicing any sport. You practice so that when it goes real, that you're ready, and your muscle memory will remember those good shots and hopefully forget the bad shots, or at least be able to correct the bad shots. For the folks who are the premium active trend trading members, we do a training every Wednesday night. This past Wednesday night, we did refining a routine. I hope that I know that many of the comments that I got back, people found that very helpful. This week, we're going to be talking about the psychology of self, a trader's best friend or a trader's worst enemy. Oftentimes, one of the biggest stumbling blocks that we traders have is ourselves, and learning how to work around our idiosyncrasies and recognizing them is a very big part of learning how to be a master trader. So we'll be talking about that this weekend, or this next Wednesday night. A couple of things coming up. Of course, tomorrow is the Bay Area Moneymakers. So if you're in this area, in the Bay Area, come on down to the Masonic Temple down in San Jose. 9 o'clock tomorrow morning, we have a guest speaker, Brian Gonzalez from IBD. We'll be talking about advanced entries. In other words, the kind of entries that we like to do as active trend traders. And then July 16th through the 18th, the Money Show will be in San Francisco, and I will be presenting. On wealth building and income generation with index ETFs. And so if you are in the Bay Area, I believe I'm presenting, I'll put out some more information on this, but I'm presenting on Saturday morning. And so it'll be really good to see folks from the active trend trading system there. So what's the market doing this week? Oh, our buddy Mike. Mike is, poor guy. He's out, with all the rain that's been going on down in Texas. He won, had a whole bunch of leaks that he had to get fixed. Got an air conditioner that broke down. It's getting hot in Texas now, so he had to get his air conditioner fixed. And then today, I guess he worked. He worked up so hard that he actually had to go to the doctor, not just for a checkup. So, David, yeah, the Money Show presentations are typically not recorded, but it's a really excellent question. David asks, is there any chance that the Money Show presentation is recorded? Those are typically not recorded, but a lot of times I cover some of the things that I cover at the in the Money Show and some of the other presentations. If you're a premium member of Active Trend Trader, you'll get a dose of it, because I roll that into what we're doing with active trend trading. So what the market's doing. Seems like we have two warring tribes going on right now. One is called sellers. The other one is called buyers. The buyers have kind of stepped aside for a couple of days, but it looks like they may be coming in at some specific support levels. The S&P is finding support, but they're finding lower levels of support. Right now, the S&P looks like the weakest of the indices. NASDAQ held up pretty well, and the reason I say it's the weakest, and we'll see when we look at the chart, is it's hanging out below its 50-day moving average, which in turn helps pull the moving average, the 50-day moving average down. And if it'll ever tip over, that may give us the the impetus for the prices to go lower. And it's not so much that I'm promoting a bear market or anything like that, but I would like to see a real healthy correction somewhere in the range of somewhere between 15 and 30%, to help get rid of some of the froth that's in the market. The NASDAQ hit resistance at 450 doji Hammeri last week. And so that was kind of indicative of it it didn't go any place this week. The Russell is holding up pretty well. If we ever get the Fed to commit to some kind of an interest rate or something like increase, even if we go up just a little bit, I looked at for that increase of interest rate to at least initially negatively impact the Russell, because the Russell is full of small caps, which typically benefit in a low interest rate environment. So the market seems like it's continuing to be opinion driven rather than even news driven here over the last couple of weeks. We know we've been going with the ups and downs of Greece, and Greece basically thumbed their nose at the European Union a couple, either I think it was yesterday when it says, oh, he kind of gave him the old Wimpy excuse. Those of you who remember Wimpy from the Popeye cartoons, I'm gladly pay you Tuesday for a hamburger today. And that's when they kind of said, well, we know the bill was due this Friday, but how about if we let it go to the end of the month? And there's just a lot of issues there in Greece that the linkage, while Greece is not a big, key player in the scheme of things, it's the linkage to the potential domino effect if Greece goes badly. The underlyings of the markets, we've talked about this on Wednesday night. We've been talking about this for several weeks. The underlyings strength of the market stinks. We'll see, and I'll be talking a little bit about that here shortly. And more people are starting to come out and say that, of course, this is a stock pickers market. It is not a necessarily an invest in the indices for a long term, but it's basically a stock picking market. Because as we see, fewer and fewer stocks are participating in the upside. And speaking of which, the percentage of stocks above their 20-day moving average on the NYSE, this was the last week's chart. As we can see, we got into a little bit of a sell-off last Friday, and that in turn has turned into this week's chart. This was, I believe, that sell-off right here, which ended up a little bit. And so what do we get this week? We got prices pushing up a little, but we still have this longer-term downtrend in the percentage of stocks that are, moving above their 20-day moving average continues to slide to the downside. Will we get, a capitulation where we get back down here in the 25, 20, 15%? Where if you find this chart on barchart.com, you can go back to October, and October got down into the 5% level. And then that in turn over the next little bit it actually fueled the rally in October that turned out to be a really fantastic and a good rally. So we'll be watching this. We basically pushed up on Wednesday, and now we fell Thursday, as you're probably very much aware of what happened with the market yesterday. And then today it's been pushing down a little bit lower. And again, our level that we like to take a look at is down here in the 30%. This is one of the things that we look at to trigger the early warning alerts, but by and large, not all of them. Not all of the, because the other ones are proprietary that we don't really talk about, but we're looking at, and this is kind of gives us a heads up. What's this telling us? It basically is telling us that on the pure index like the NYSE and the Russell, the Russells and the NYSE will emulate this type of chart a lot more than the NASDAQ and the S&P, which are weighted capital weighted towards certain stocks like Apple and a few others that really are the driving forces behind that index. And this kind of gives us open, it allows us to take a look under the hood and say, okay, how's the health of the market really shaping up? Yeah, well, there may be some stocks that are doing really, doing well, having really nice runs. What are the majority of them doing? Because normally, the more and more stocks that are kind of starting to fall out of favor and this type of thing, at some point, gravity takes over and the weight of the other indices holding up gives way, and then you move into a little bit of a nicer corrector. But that process of topping or that process of falling apart sometimes takes anywhere from a few weeks to a few months to sometimes half a year or more. So we'll be keeping our eye on that. We are not saying that we are going into a specific correction, but it looks like the clues are at least starting to shape up, saying that who knows? We may be in a topping type pattern. Here's the indices, and this is something I started putting on the charts here a couple of weeks ago, and the lower one shows where we were last week. And this is comparing to back to the beginning of the year, how we are this week. And as you can see, the Dow is actually down from last week. The S&P is down from last week. The NASDAQ is down from last week. Not a lot, but look at this. The Russell is actually holding up well. It's a little bit up from last week. So I'll keep, I'll kind of watch that, and we'll see that a little bit more on the charts. Speaking of which, let's get over to the charts. So here we have the S&P. S&P it's maintaining this nice little short-term trend line that's been in place for several months now, where it comes down and hits this low, and it just turns out to be that this trend line is almost running directly up the 100-day EMA, and when it gets down there, then it typically turns around and bounces back up. Right now, we have this other downtrend that's in place. That this is an uptrend. This is a downtrend over here over the last couple of weeks. Short-term downtrend highlighted by these lower highs as the market moves down. Are we going to rebound and just jump back up there? We'll see. I mean, it's in a place where that could be expected, but if you go back on the true strength indicator, one of the things I like to look at on the true strength indicator is where do the really strong bottoms happen. And typically on the TSI, when the TSI gets on the S&P gets down somewhere between 40 down to slightly below 50, a lot of times that's where it chooses to rebound, as we see here. And if we went back a little bit further in time, matter of fact, I'll do that real quick. At least back to here we got a 50. This was just before this was in December, where we got a nice little run. And then if we go back to October, this was that area here, right down to the 50 level. And that's where it actually rebounded from. Now, can it go lower than that? Certainly it can. At the same time, though, that gives us a clue as to if the market is acting with the same characteristic that it has acted with over the last several years, that when the true strength index gets down in those levels, start looking for reversal candles, start looking for levels of support for potential bounces. Right now, it looks like we're heading down. On the weekly chart, again, TSI is rolled over. Same thing applies on TSI, on the weekly on TSI, but you need to look back in time to see where those especially on the low side, where those levels of support are on the TSI. And then if we're at a level of support, start looking for the potential reversal. Stochastics running down. The one thing that's kind of interesting is momentum actually picked up a little bit this week, and this is positive momentum, so it never really dropped below the 0 line, even though for the week the S&P is down. Now, on a weekly chart, we'll look what's going on here. Last week we had a down week. This week we have a down week, and now we've turned the 16-week whole moving average pink, which oftentimes is an indication that we've got some more downside, or we're going to do some consolidation in this area here. Got support down here at the 2064 level. And so if this trend line breaks, then we could see a revisit there, which you can see that coincides to a level of, a zone of support on the S&P, the NASDAQ. NASDAQ's holding up a little bit better. It is rebounding. It finally breaks through the 20 yesterday. And now if a market is acting as expected, once you close below a moving average, you expect it to go to, there's a higher probability that it will go to the next moving average. And we see that that's exactly what happened. Looks like my audio is lost. We'll hopefully come back here shortly. Anyway, and sure enough, it came right down there this morning, right down to the 50-day moving average. And then rebounded. Can everybody still hear me okay? Hello? Okay. I should be back. Okay. When the connection was lost, which chart were we looking at? I'll go back and. Okay. So fortunately, I got a pretty quick warning on this side. Audio's back, and so when we dropped offline, had we started to go into the NASDAQ? No, we were still on the S&P. Okay, we were just changing. Okay. Hopefully the weekly chart will come up sometimes when it drops offline, which. Okay, cool. Thank you very much, folks. As I was saying about the NASDAQ, and hopefully the weekly chart will come up here shortly, the NASDAQ, one of the things when a moving average is breached, such as when it closed below the 20-day yesterday, oftentimes that increases the probability that we will test down to the next strongest moving average. And that's exactly what happened this morning. As you can see, we came down, tested the 50. Now, since we are in an uptrend, oftentimes people can and will use this as a signal to go ahead and off of that support level, I'm going to take a small, bullish position with the anticipation I will at least run back up to the, 45, 50 level. And that's fine. The problem with doing that at this point is if I was going to do that, I would like to see my moving averages closer down in here, because that way if we get a breakout of that moving average, we should get a run up. And that's because as it is right now, where are we expecting it to potentially go? Well, the first level of resistance will be right there back into those moving averages. And so you may get a small move, but you have to be really quick to take your profits in a situation like that. Let's take a look at the Russell. Oh, of course you are. Okay, come on, Russell. There we go. Okay, Russell, as we were saying, Russell kind of did the same thing. It actually did not close below the 20-day moving average yesterday. And plus, we've got these really nice tight consolidation of the moving averages. So what it is to do, here is an uptrend line that it had been in for, several weeks, almost almost a month now. And we get a rebound right at 50. This one was a lot more healthier because the 50 is sloping up. And who knows, the Russell may in fact now go ahead and power on back up and retest up on these levels. On the weekly charts on the Russell, it's looking like it basically stalled out on the TSI just above the zero line, maybe getting some upside traction here. But if we are getting upside traction on the NASDAQ, remember it is really close to just running into this resistance zone. And so yeah, profitable. You can take you can get into a trade here, take the profits there, but realize that there is overhead supply that may stop the progress. So nice looking chart. Like I said, a nice looking chart on the Russell. And so, okay, I think we are back up. And just doing a real quick check. You can, in fact, see my screen, and it should be the Russell, and you should be able to hear me now. Yes? Okay, thanks, Dave. Another chart that I'm kind of starting to keep a look at is just the straight NASDAQ NYSE composite. And as you can see, NYS composite. Now this has thousands of stocks on it that make up this composite, and as we can see, it is actually sold off today. And while it's searching for some support, it has actually closed below the 100-day moving average. Now we'll see if this continues on. This is the index on which that other chart, the percentage of stocks above their 20-day moving average. This is where they draw all the data to make that other chart from the stocks that are on here. Excuse me. Okay, so that's where we're at with that. Just a real quick overview of the active trend trading system. We have built the active trend trading system around the 5 pillars of a good system, and basically to show what to trade when we only trade top quality IBD growth stocks and or index ETFs. We show when to get in, when to get out, what strategy to use, and what to expect. One of the things in the month of June, we will be expanding. Now that we have basically provided the majority of the training on how the active trend trading system works, we will expand into we have 3 prongs or 3 points, strategy points that we try to work off of the system. And of course, that's buying and selling just stocks and options, stocks and index ETFs. A small piece on basic options that we'll be covering, and then some what I'm going to call wealth building and income generating, which we're going to, and so these will be, here I'm trying to point at the screen with my finger. These 3 aspects, I think that this will round out the active trend trading system to give them their focus strategies, and it should be very positive for all members of the active trend trading team and family who are premiums, early alert folks, and so we're really excited at how this is going to work out. We'll see some slight modifications to the website that will adapt to these. That'll be taking place during the month of June. So, and speaking of which, here is one of those. This is the wealth generating and income wealth building income generating trade. This is a trade I laid on at the end of April. I basically bought this long January 2017 spider put with the anticipation over the next 18 plus months, I expect the market to have a correction. Now, but the timing of that correction, who knows when that's going to be. So what I've turned around and started doing is I sell puts against this. Because right now the market is still in a little bit of a slight uptrend. Maybe it's hit its head at what the resistance, its high point for, and it is now going into a correction standpoint. But on average, I have generated 129. This is over the last 6 weeks, $129 per week worth of income, which equates on this investment of a little bit over $10,000. About 1.2% per week, or approximately $535 per month of income. But I'm treating it as wealth generation because what I'm doing with this is I'm paying down my cost basis. So as of not including any of the trades I put on place this week, but just taking these into consideration here, we have paid down the cost basis from $21 down to $18.92 on this put leap, and so our return over the last 6 weeks is about 9.9%, and we're just patiently selling puts against it at specific times, and that's where with the active trend trading and the training we're going to be talking about during the month of June will help people to see the specific time of how we do this and how we choose our options, because we'll be doing this with both leap puts and leap calls. Here's where we're sitting overall as of this morning on all the trades we've done this year so far. We'll be pushing hard towards reaching our target, 40% for the year. You never know if you're going to get there. I'm looking somewhere between 25 to 40% for the year as our objective, our desired return. So picks for this week, we highlighted FLT, NOAA, YY. Early warning has been basically closed, and we're waiting for a reset signal. Got a great email from Gary, and I really appreciate this, that he's starting to see profits now and becoming more confident in his trading, and that's exactly what we try to do at Active Trend Trading, is I want people to know how to fish and know where to fish. So here's a little trade we did this morning, past setups. We've been watching YY for several weeks. And yesterday it did a nice little support bounce off of the 100-day and the 50-day moving average. This morning, I hope some of you took advantage of it. I think Richard said that he, well, I hope you took advantage of this one this morning, Richard. But we put we put in place, it's a flag setup, we put in place an order to buy with a limit of 66.10. We were actually filled at 65.84. I knew that there is strong resistance up here in the 69 to 70 level, and I'll be darned. As you can see from this candle, it took off like a jet later this morning and hit its target and took itself out. Half of the position. We'll still hold on to the rest of them, and we'll add to that if if we possibly can. So, and here was the plan, and here's what went out to members: is basically an alert went out, both text and email, saying, I'm getting in at this point. Was filled at that. Along with that alert, it says, exit the trade and or sell half of the position at 69. Told everybody what the stop loss was, 63.50, which was just right down below this swing low. And the expectation was a run to previous high of 70. And that was the expectation when it was down here in the 66 level. So it has pushed up almost to that. I don't know where it's at right this moment in time, but I think it's probably doing okay. But if you were able to get on that trade, that's a good thing. And so based on that, I just want to remind everybody that if you're tuned into if you're tuned into the How to Make Money Trading Stock webinar, for people who take out of their time or even watch the video on our YouTube channel, you can take advantage of a 40% off our regular membership, $29.99. If you would like to see about the early warning alerts, it's a yearly membership, and that trades about somewhere between 3 to 6 times per year, but it's designed to take advantage of the research we did on trading the index ETFs, and we amp it up a little bit by trading the leveraged index ETFs. So for that is, like I said, for how to make money trading stocks attendees, you can go here for this special introductory. So folks, that's it for today. I hope you are prepared for whichever way the market goes. I would think about continuing to trade support resistance on the index ETFs, but it is really, really fast trades that last maybe a couple of days. And so if you are ready, let's remember, we'll see you next week. Have a great weekend. Keep your egg growing. And now I'm ready to look at some stocks. How about you guys? So what stocks do we need to look at today, folks? Okay. Let me get back over to my charts. Palo Alto Networks, they are basically this is almost like an AMBA type of stock. It's the gift that keeps on going. Broke out from this little flag over here, Richard, and now is heading higher. How much higher can it go? Who knows? And the TSI, it's like stochastics, but it's not. It also measures some of the internals of the individual entity that is charting. And right now we are up in, it could just keep pushing on here and stay up at this level for quite some time. Doesn't happen a lot because you will get we should get a pullback, but this was just a brief pullback that is now responding to the upside. The market is mixed so far today, and so it's really kind of interesting that there are several stocks on a mixed market that are still pushing higher. If you're already in the stock, I would basically just apply the 8-day rule, 8-day moving average rule. If you get a close below the 8-day, and then the day it closes below, if it's violated the next day, the low of that day, go ahead and exit the position, or at least a piece of the position. Zoe's. Oh, nice breakout. Look over here. Yeah, real big, on earnings break. Now that we have the stock and it has broken above these levels, and Sandra, what I like to do is I like to come over here to the weekly chart to see where the bodies on the candles close, because that's indicative of stronger support / resistance. And as you can see, it connects up over here very nicely. We got the breakout. And so based on this breakout from this 30 to 35 level, gives us an upside target of around $40 on this. But will it go straight up to $40? Probably not. Yeah, but that is the upside target. Zoe's had been had been showing some really nice pattern building in the past, but then it, with the rest of the market, kind of went wonky without a lot of real definitive patterns through most of this year. But now you got a nice breakout, and so I would, if you were looking to get into this, if you haven't already gotten into it, I would look to see what it does after it. After it may run up a little bit higher, but look to see what happens if it rolls back down and does a test and then goes again. Because right now we need for the moving averages to catch up with it to be able to plan trades off of. Let's see how YY is doing. It's really nice to be surprised occasionally with these kind of trades where it just, not only does it take off, but it just really takes off. And so this is a nice little move up. We'll see if it gets back up and can pass the 70 level. But yeah, launched out of here pretty well this morning. And again, I had put in a limit to be filled at $66.10, and I was actually filled at 68, 84, 85, something like that. And then since it really surprised me, since the follow-on orders, both the stop loss and the first target T1 was already entered as part of that original order. When it hit, because I was working on presentation slide, and so when it hit later this morning, it really shocked me. And I went, wow. So ARS is a stock that we have been being very patient with. It appears, it appears as if it has reached its cup low at this point here, and now we should start seeing to see if it constructs this right-hand side of the base. It is running into resistance at the, just above the 34 level. And if we can, get past the 34 to 34.28 level, we should have fairly clear selling from there all the way up to at least 36. And we're currently in this trade from, just about 33-ish. Or 33.80 or something like that. We were in over here, pulled back, didn't ever stop us out, but we're in this trade with an initial target of T1 equal 36. Blue. Bluebird Bio. You get an initial, it looks like it's going into one of these pattern making where it just zigs down to the either the 8-day or the 20-day and then rebounds, and it's just coming off of one of those. And if you are already in this stock from a previous entry, Judy, there's a couple of ways you can trade it. You can either take the 8-day, and if you get a close below the 8-day, and if that close is violated, or you can just run a trend line up there, and if you get a hard close below that trend line, that could be the trigger to get out. And typically, I give a stock this big, I would probably give it somewhere about 50 cents below the trend line or 50 cents below the moving averages to look at time to pull the plug on it. So, are you already in this stock? Oh, okay. Yeah, it looks like a nice little stock to trade in and out of because it's giving you nice bounces off the moving averages, and then it's running up to a resistance level. This was a nice little breakout over here based on, this is a really pretty, for those of you who are wondering about what a bull flag looks like, here's a really nice one. It goes down 1, 2, 3, 4 days, which we like to see the flag being somewhere between 3 to 7 days. So this one goes down 4, then pops up, and from there it just continues to move up. Really good for either short-term trading or sometimes just entering a position that you may have missed earlier on. A couple of other stocks that we've been looking at, VDSI. It actually did a nice little breakout this week, but this is kind of a sloppy flag here, although we did get back down to the moving averages and it broke up, but it's running into resistance up here at the 29 level. Another stock that we have been watching for a potential entry is Habit. And if Habit closes where it's at right now, this will be a bullish piercing line moving over halfway up the body of this large candle here, which could be indicative that this level here is a strong level of support, and it may lead to Habit moving on up. And Habit, once it does start to move, it tends to have some juice. One of the good things, or one of the interesting on Habit, it now has options available for you option traders out there. It's a little bit light on its open interest, but which typically means it will have bigger bid-ask spreads, which makes it a little bit more challenging to trade options on. But as we can see, it pulled right back into a support zone, and we get the bounce. And it would be nice to get it back above the 8, because this may then reverse these moving averages heading up. So, any more stocks for today, folks? Okay, CBM. Oops. Yeah, CBM looks like it's working its way back up to the top of a resistance area up there in the 44 level. If you're already in it based on this entry here off this little short flag, then it's basically just following the 8-day moving average, but look for it to get some resistance up there in the 43.80 to 43.30 up to the 43.30 up to the $44 range, because it's had a pretty good move. What's its volume profile looks like? Yeah, just a little bit less than 500,000 shares on a daily basis. Our buddy Twitter. Yeah, Twitter made the IBD newspaper this week, and they were talking about what's called an L pattern. Well, that L pattern, a lot of the people will call that just a flag, a flagpole pattern or a flag and pole pattern. And what it is basically you've got this huge drop, and then it's like the flag's flying at half mast. And then if it breaks out the bottom of this range, it is likely to move the same amount percentage-wise as the initial part of the pole. So this fell from, let's say that this fell to there, and if I can find that, where'd it go? And then if it breaks out the bottom of this, then that means Twitter could potentially go down to about 20 bucks. That would be interesting. But that would be a flag, a flag type pattern, flagpole. Here's the first part of the pole, here's the flag, and then if it fails, then that's where it could potentially go. Okay. Any other stocks we need to look at, folks? No, I didn't do FLT yet. Dan, I will do that. Here's what would cause that kind of failure, the flag failure. Basically, Thompson, what's happened is it's found a level of support, which is typically probably a very old level of support, and it's just driving sideways, and then if institutionals had been a big buyer of this, they can't sell all at one time, but then they'll have it programmed out, and as soon as there's any hint of additional selling, then everybody gets on board to sell again, and the plunger has been pulled, and down she goes. Here's one of the reasons why at least the S&P is not doing as well as it could be, is because Apple's been a little bit weak here lately. As you can see, it's pulling back. Will Apple find support here at the 50-day moving average and rebound from there? We don't know, but it could. This would be an ideal place for it to rebound, and that would give it if it gets back up to the old highs at about a 4% move, or about $5.62. Keep your eye on Tesla for either rolling over and doing a really nice flag. It would be nice if you get a rollover where we pull back down here into the 240 level, or 240 to 235. And because Tesla is one of those stocks where it's a short-term trade, but it does really nice patterns. And the moves that result from the patterns are typically large enough to if you're interested in, if you're merely interested in how can I be in a position to make money, Tesla is one of those that sets itself up well for that. And FLT, FLT. After getting stopped out on FLT yesterday because it dropped past our stop loss, of course, we get a nice reversal today, and away she goes. And it hasn't quite broken up back through this resistance here at the 156 level, Dan. But at the same time, it does get it did get its bounce. We were taken out by 13 cents yesterday as it dropped below the 150.50 level, and get a nice reversal here. But as it stands right now, it is basically still stuck between that level and this level down here, as we see. I thought Wednesday's candle was going to really, really take off. Things looked really positive here, and it didn't. And that's that's the way it goes sometimes. I'm not taking FLT off my watch list, but I want to see something just a little bit more constructive. Taser looks pretty good. Folks, in reality, if it wasn't the weekend, I would look at potentially doing an option trade on this if options were available, buying probably the 30 out in July, with the anticipation it was going to go back up here to 35 over the next few weeks. But this is looking very positive. TSI look positive, momentum turning up. Volume is not jumping on board yet, and we've got some kind of cross currents between the weekly charts, what the indicators on the weekly charts are showing, and what the daily ones. In other words, they're out of sync with each other. And Srini, the access to this webinar will be, I'll send out both a email notification regarding the access where you can find the recording to the webinar, or you can always go to Market Tech Talk, my YouTube channel, and I always post the week's How to Make Money Trading Stock Show there. So, ew. Judy, this is a really ugly chart. Apparently, somebody knew something prior to earnings, or it had some kind of a bad news report, and so it fell from the sky huge a few days before earnings, went back up on earnings, then dropped back up. This is one of those stocks that if it's easy to borrow, oh, you bought it after the drop. Okay. Depends on how far down here that you bought it. It will indicate, if you bought it all the way down here at the very bottom, then I mean you can probably get a nice dead cat bounce off of this. But look where it dropped to. It dropped right to almost its where it came open. I'm assuming this is its IPO open. So it had a really nice, $25 rise, and it lost almost all of its, the value that it had been doing. So it's right back down almost at IPO levels. This is one of the exciting things about trading biotechs. Depending on the stock, you never know when this is going to happen. What kind of volume does this have on a daily basis? Yeah, about 1.2 million for an average. So it's got good volume. So was this drop, this is a biotech, did it have a drug failure or something that led to that drop? Sometimes if it's a one or two drug company that's betting all the thing, everything on that one or two, okay, just poor results. Okay. Yeah, I really don't have a lot to say about this other than if prices do get back up into this level here, about the $16 level, that may be a good time to take off some profits simply because you've got a huge gap down here. This whole gap here can function as resistance. Now, I'm not going to say that it's not going to just continue to, turn back around and continue to climb right back up. It could happen. But just to take a little bit off there, because one thing that's nice, I see oftentimes I'm looking at the past performance of this stock. It puts in okay average patterns, but they do define where good buy points are. And so sometimes you could, take your profit, park your money, and then wait for it to go into a new pattern, and which requires patience. Okay. Well, with no other stocks, I've got a couple more minutes here, folks, if you need to. CF, okay. It has done a breakout from basically just a straight cup type pattern on the weekly chart over here. I go in here and I identify where my body highs are. That sounds so wrong. Anyway, that's where those are. Where you got your breakout, and now it's just continuing to consolidate here. The buying volume is average, but it's okay. And so the one thing I don't necessarily like about this chart, John, is the not a lot of patterns are evident. It's a little bit sloppy type pattern, the big ranges on a daily basis, and that makes it a little bit more challenging. It makes it a little bit more challenging to plan your trades. If you do wind up with a chart that looks like this, lay in go over to your weekly chart and lay in where your support and resistance are, And basically just be patient. If you're not in the stock already, be patient. If it breaks down below this by some percentage, that may be a time to take profits, or if it comes down to a level that if you're not in the position, that's the time to get in and just see what happens. Then Sandra asked me, how did I determine the target on Zoe's? Let's take a look at Zoe's again. Oh, okay. Basically, the target on Zoe's was determined by taking your low here, which is the low of this pattern here. It's been working in it, which was $30. The high of this pattern is up around 35. So basically, it's just taking, once you got your breakout above 35, adding $5 to it. So, okay. And that's basically the way, the technical way of determining. It doesn't mean that it's going to, one, make it up that high, and it secondly doesn't mean that it won't go higher. But to get a feel for, where it has the potential of going, that's why we do those measurements like that. And one of the other things that we do is we'll take a look at is, how long did it take it to go up $5? Well, in this case, from the time it went from here, which is the last time it touched that high, to the next time it touched that high was 1, 2, 3, 4, 5, 6, 7 weeks. And so if you count out from there 7 weeks to say, okay, if it is moving with the same velocity, that's the potential, somewhere within the next 7 weeks. If it's moving with the same velocity, it should reach that high. So June, it says CF splits 5-for-1 in June. Okay. So what you may be getting, John, on that right now to the upside is what's kind of called the pre-split move. And oftentimes after a stock does do a split, they will go into post-split depression and pull back. Let's see. Yep, here it is. 5-for-1. That's a pretty significant number of shares to split. So, folks, I would just want to say thank you so much for joining us today. I hope Mike takes care of his. I don't think he's going to have anything else break down in his house, and so hopefully he'll be back with us next week. Have a great weekend. If you are a BAM member, we'll hopefully see you at the BAM tomorrow. So, have a wonderful weekend, folks. Spend some time with the family. God bless.